right. Good morning. Good morning. I've taken over. I'm taking over for Lee. For some reason, I can't start the event in Discord though. Yes, I can. All right, so we're on social media. Give me one moment, guys. I just got to get this all started up for the Discord peeps. All right. Okay, I think we're unmuted. Hopefully you guys can hear me okay. Let me get my screen started. That's the wrong button. It's a morning, guys. I'm going to be lead today. I've taken over. He gave me his accent, and not his portfolio, but he gave me his accent, so we can all hang out together today. Also, are you guys able to hear me okay? First off, before I ramble too much, because I will. I'm going to ramble a lot. I also don't know how to turn off the truncating part thing. Oh, thanks, Porter. Appreciate it. All right. So this morning, we don't have a whole lot going on pre-market. So I'm just going to keep looking around. We'll go through the process. Oh, thank you, Porter. Appreciate it. Loud, but not too loud. Got it. All right. So right here, I've got, just so everyone knows, I'm on the small cash account today. I've got $32.14 to trade with. Not looking to go super ham. This week, I just kind of want to do like a 1% per day thing. Also, while I'm speaking of that, let me pull up my notepad over here, and I will walk you guys through. Actually, you know what? Let's do it a different way. Let's do it a better way. Let's do that. I want to show you guys something. Also, let me share this in the free lobby, just so that everybody here knows that we're not starting at 9:30 today. We're starting at 9:15. And then everyone has time to show up. Also, good morning. Yeah, good morning. I can't talk today already. It's not going to be a good one, guys. Charlie, Elton, NG, IBU, Paul C, Carrie. How's it going, guys? How Stickman? There we go. Now it's a stream. Hell yeah. Good morning, buddy. Candy Penny, my friend from PA. What's going on, guys? I'm trying to find something for you guys. I think you'll like it. Let me duplicate that. And I'll drag it over here, and then I'll make it a little bit narrower so that we don't miss out on the price action that we're not really doing anything with just yet. So I want to show you guys a really interesting concept. And before I go too far down that hole, I want to show you guys just some basic numbers, okay? And I want to really set the tone here and help people reframe progress in the market, okay? Because a lot of people, like, everyone just gets pulled in, right? They see the profit porn, they see the 4-digit % runs, they see the huge, moves and stuff like that. But very few people are willing to just accept a small profit that they can get consistently, okay? And that's what I want to really emphasize today, and pretty much for the rest of the week on this account. But I want to just show you guys that if we do, let me just turn all these to, let me just turn all these over here to 0. Sorry, made a little spreadsheet last night. So basically, this is just what happens if you don't put any contributions in and you start at a small number like $32.14, okay? So at week 0, which would be this week effectively, since the week's almost over, there's not going to be any increase. And hopefully you guys can see the numbers okay. I kind of made them small. So, just for the rest of this week, assume that there's no other moves in this account, right? Just 32.14. And then the first of each month, I want to add $100 to it. So that way we're going to start increase or some number, right? I haven't really settled on a number yet, but just a small number that keeps it relatable for you guys. So basically the idea here is that without any contributions whatsoever, after the first month, so after 4 weeks, that $32.14 should be up to $39.22. So not a lot, right? Everyone's like, oh my God, it's $7, right? $7.08. Not the end of the world. Not going to change your life much, but it is $32.14 that you've been able to hold on to and make grow proportionally. Who here knows what that percentage is off the top of your head? Oh, ignore all that. So 39, let's just figure it out. 39.22 minus 32.14, $7.08 divided by 32.14 times 100. That is a 22% increase. So not bad, considering that most traders fail in their first year. By 90% of traders fail. But that's not really what we're after here, right? Because nobody wants to really commit a month to just making $7, right? It doesn't feel good to do that. It's a little bit less rewarding. So then you go into the next month and you say, okay, well, again, assuming no contributions, you're just growing this 1% per day. It's not a huge number. At the end of that second month, you'd have $47.87 or 85 cents, or $47.85 minus 32.14. You've made a total profit of $15.71 at this point, divided by 32.14 times 100. That's almost 50% increase. I would say that's getting pretty acceptable after 2 months. Let's just skip down to like 6 months, right? Because we can want to speed this up a little bit because it's pre-market and I don't want to have too much going on. So at the end of 6 months, you'd be at $106.07 minus 32.14 divided by 32.14 times 100 to get a percentage. Hey, Lempak, how you doing, buddy? You're up 230% at this point, right? So it's a little bit more impressive in terms of percentages. And then the cool part here is that you didn't have to work too hard for it, and you didn't have to add any extra money in here, right? So even if you just have $30, that's why I keep these accounts nice and small, to show you guys that this stuff is possible. And it's not going to go super fast, if you don't have a lot of money. But let's assume now that we're going to add $100 in, at the same, end of month one, right? You would have 161.24 instead of, what was it, 37.08 or something. $7.08 profit would be 39.22. I apologize. So you basically have another $22 or something like that in the account that you didn't have before, just because you compounded on that $100 that you also added in. So, and if we just really quickly skip down to month 6, you've contributed $600 at this point, plus the 32.14 that you would have started with. And now you've got $1,380.84. So you've more than doubled your money in that case. And then you're dealing with much more impressive numbers, right? So it doesn't take a whole lot to make a whole lot in the market. But we all understand that concept, right? You basically you make consistent contributions. You can lock in small achievable profits on a consistent basis. And then at some point, like if you go down to, let's say we go down to like 25 months. So just over 2 years, right? Yes, DK, we'll get to the market here in just a moment. There's nothing going on pre-market. So I'm kind of shifting over to this stuff right now. Because I want to show you guys that there's value in slowing down, okay? So, at the end of 2 years, basically, that's an $84,000 sum, okay? So just pay attention when I say that you don't have to make big profits in the market. So if I just want to knock in, 1% per day and just put the market aside and live my life, I can absolutely do that. And I do that pretty consistently, especially on my larger accounts, because I don't want to look at, a 17-point variance in a bigger number, because that wreaks of emotional chaos. So, you might see big moves in the market, but if I'm just looking for a little piece like this, I can just get in and out as many times as I want. And it's pretty easy to do on most days. So if you're struggling, if you're not net positive over the last 3 months, that's at least something we can consider, right? I don't know how many people are in here. I don't see the count anymore, but there's quite a few people in here. Some of you guys are lifetime members. Some of you guys are brand new. And I really just want to emphasize that you don't, if you're too exposed to uncertainty in the market for too long and too many times, you're going to eventually feel it. And I don't want that to happen to you guys. So how do we bridge this gap, right? Because nobody wants to take too little profit, and nobody wants to just expose it all and hope for the best, right? So what we can do is this strategy I've been teaching you guys. So if, for example, you wanted to place a buy right here for whatever reason, let's say you buy, 5 shares out of, or let's say you buy 8 shares out of a 10, or let's say you buy 10 shares, right? Let's say you wanted to lock in the best of both worlds there and get 8 of those shares locked in right here at just over 1% or 1%. You can lock in that guaranteed 8 share 1% profit, and then let those 2 other shares run as high as you want them to go. It doesn't matter. There's no cap on that, right? But once you lock in these 8 shares at that 1% or whatever low percentage you want, effectively you're just paying yourself an interest fee to place the trade on the 2 shares. So it just makes it a lot easier, and you're guaranteeing yourself a net profit on those 8 shares, so that the remaining 2 shares would have to go down like 4 or 5 times that distance, or some big number here before you give those profits back. So it significantly improves your odds in the market, as well as just consistently locking in profits that compound. So you just got to figure out the number of possible outcomes and then make a plan for each one. And in this case, there's only 4 possible outcomes. If I place it here, price can go here to hit my target, and then it can go up higher and hit the second target. The price can go down and hit a stop loss, and that's it. Or the price can come up and hit this and then hit a stop loss. That's the only 4 outcomes there. Okay. So now if we look over to the actual market, there's only a couple things that, let's just say, for example, right, we just wanted to place a buy right here. And let's say we wanted to have a stop loss right here, just for fun, right? We're just going to watch it. I can't trade this because it's a 76-cent stock, which means I need to commit $76. But what is, let's just do 76, what is it? 76.35 plus 1% would be 77.11. Where is that 1% hanging out? It's 77, oops. Maybe right here. You guys see how stupidly tight this is? That's all I would need to get. And just locking in the bulk of my shares guarantees me a net profit. And then there it is. That right there would have been the profit. And then I've got the remaining shares that can just go as far as I want them to. So that's the speculative part of the trade. But I want to lock in that consistent, achievable small profit right here and now. And then I have to just accept that it adds up over time. And that's where like this spreadsheet comes in. And I made sure that I went through and did all the math for you guys so that you can see, again, I'm just going to keep this open over here in the background. But you guys can see there's value in just not trying to force things in the market. So one other thing that I wanted to show you guys really quickly before we get back to the market, because we're in auction cross now, is the number of dollars that you put in, the consistent contributions. If it's a lower number, then your percentage ROI will increase. Okay. And if you put in a bigger number, like $1,000, your percentage ROI over time will decrease. And it might seem a little counterintuitive at first. And I want you guys to think about that because I know why it happens, but it's always kind of fun when people break their brain trying to think about it. So go ahead and think about why that might happen throughout this stream. And I think you guys will have a good time with it because it's going to be fun for your brains. You got to have a little bit of healthy stress in there too. So, all right. So in this account, I'm going to take maybe 2, maybe 3 trades. I'm not going to go too crazy today. The only one that I see that has I see 1, 2, 3 stocks so far that have a greater than 1-to-1 risk reward range. Let me go ahead and clear out my day trades list. So we're just going to start fresh today. It's going to erase all my lists. All right. So up here on my day trade watch list, I'm starting fresh. Now this one here, INTS, I don't know if you guys can see it clearly. It is a sub-dollar stock, so I personally can't trade it on this account until it gets over $1 because of Weeble's minimum share requirement. But I will add it to the watch list, and we can trade it out and practice it and all that good stuff on this account. I just can't personally trade it, so let me I'll add the tickers, and then we'll go through and plot our levels. VSIG is another one. And I'm looking for stocks that have a greater than 1-to-1 volume to market cap ratio. So what I mean by that is if I look at the volume and it's greater than the number in the market cap, then it's a positive ratio. And that's one that I want to add to my watch list and watch. CMBM has a lower than 1-to-1 ratio. It's 31.41 million shares in volume and $83.32 million in market cap. And the reason I want a positive ratio on that is because I want the volume to exceed the shares times price of the stock to make sure the price is within range, a reasonable range, like between like $2 and $10, and that it has sufficient enough volume to be meaningful within that float. Okay, so that's the reason I look at those. JZXN is the other one here. It's got a positive ratio, and the rest of these are just kind of chilling. So besides HBIO, so these are my 4 for right now. I've got HBIO, INTS, JZXN, and VCIG, and I'm going to type them in here. HBIO, INTS, JZXN, and VSIG. Okay. Type the formula. Yeah. So market's going to open here in about a minute. Volume to market cap ratio. And that's a VTMC is what I like to call it. All right. So let's go ahead and keep an eye on this. I'm going to just draw a line here at $1 on INTS because, again, I can't trade that below $1. So I got to wait for a break over that. I'm expecting this one might probably halt a couple times up or down. top. I don't know. I can't see your names. They're like truncated. I think because I'm streaming, but I don't see the button to disable it anymore. It used to be a little like purple button in the top. But I'm assuming that's top. Yeah. Okay. So it's high watch for me again. VIVK, MSAI, ARBB, and HBIO also. Yeah. I think HBIO is probably going to get a lot of the attention today. Now, this is also sub-dollar stock. So I can't trade it myself on this account, but we can keep an eye on it. Market's going to open here in about 20 seconds. I'm just going to take a look at SPY. All right, so we probably, I don't know. It's going to be pretty ugly either way, I think. A lot of potential in SPY to go in both directions. I'm not going to be trading that today. Probably just going to go back to my little watch list here and just see which one of these wants to take off. And I'm just going to come back to the 2-minute. So I'm looking at HBIO now, and I really just kind of want to look at these. I'm just going to kind of hover around like a little bumblebee, just trying to get some pollen on my butt. Just kind of seeing what's moving as the morning moves. So I can't trade HBIO. It's sub-dollar, but it looks like it's got potential here. INTS, same thing. It's just kind of hanging out here, which is typically good for bulls, but we'll have to wait and see which way it actually moves. But the fact that it hasn't sold off at market open is usually a good enough indicator for a lot of people to just jump in. I can't trade this one on this account, so I'm going to go ahead and skip out on that one. VSIG selling off a little bit, and JZXN pulling down a little bit. So for JZXN, I'm probably going to wait for a break over like 39 cents. But again, this is also a sub-dollar stock. So really the only one that I can trade on this account is probably going to be VSIG until we get something else to move up in the list for the morning. So I kind of can't trade any of these on this account. So, and the only one I can is kind of moving down. So that's just the way it goes sometimes. So I might just do some shopping around and continue shopping around until I find something that I like. But we'll have to just see what the market gives us. And, you know, that's always going to be better than trying to force something on something that I can't trade. Like if I wanted to trade one of these and over allocated, for example, unless I was comfortable locking in just that quick 1% and accepting that for the day, then that's all I could do. Anything beyond that would be risky. And since I'd be over allocating, I wouldn't really be able to manage that position very effectively. So kind of like CMBM. Let me kick it up to the 5-minute on this one just to see what kind of levels we're dealing with. Yeah, let me draw these out. So those who are new may not be familiar with the strategy, so I'll walk through that here in a little bit. Otherwise, you guys are all pretty comfortable, I assume, with what I'm doing here. All right, so CMBM, I kind of like it. I like it a lot. See if I can refine these levels at all. I can't really because I like that wick right there. Yeah, I think CMBM is probably going to be one that I watch. Let me add that to my watch list here. So basically on CMBM, I'm looking for either a break from there to there or a break down here and then a bounce up to there or somewhere up above where I enter. That's all I care about. And then, of course, you got this kind of range right here. That is a transitory zone, so we can't rely on that for a bounce. And it is not a prediction measure. It's just an area to see if the price is going to be sticky and then kind of assess the potential for a move up through this yellow box that I'm going to color yellow right there. So these are my higher quality zones down here. This one up here is transitory as well. And this is, again, it's CMBM. I'm looking in the 2-minute. And those are the only two moves that I have on this stock. So again, I don't want to try to force anything, and I'm not married to any of these stocks. Like I'm not expecting them to work out. I'm just looking to see what's out there. And also, let me make sure I'm not muted. Okay. Sometimes hey, what's going on, buddy? Sorry, I just saw your comment on Discord. I had another window up in the background. Let me check my DMs real fast. Okay, just got a picture of a license. Okay, not sure what's going on there, but CVU, yeah, we like it. Let's now for this one, for example, there's not good data to use at this point. It's purely volume, and this is where something like this can get potentially sketchy because you know you got to go up or down a time frame if you want to look for those moves, and you've got two, but they're kind of clustered together. So let's see what the 5-minute has to offer. Nothing good. Let's see what the 3-minute has to offer. Nothing at all. So, yeah, I would probably stick with the 1-minute on this one. it's just sketchy. Like this area here obviously works, right? We had a displacement out of here, an abnormally larger candle, came back, retested, and pushed the price up with strength. So I like that level. And then of course we have another one down here, and then we have this one here as well. So it's just sketchy that they're so close together. That's kind of my only thing. So I'd like to see a wider move in price before I start looking at that personally, but we'll see what it gives us. Let me just check around a little bit. So just gonna kind of hop around again. There's nothing that I see on the ones that I can trade that I really like. So I have to look at other stuff if I want to trade. So VSIG, for example, it would be foolish of me to just jump in here. This is clearly a downtrend. Okay. So I see a lot of people try to buy the dip and all that good stuff. You don't want to do that on these low float trash stocks. This thing's been selling off since, 6:45 in the morning. The likelihood that it just magically turns around and reverses this trend as soon as you get in is pretty low. So why not just wait till it starts to reverse first? And then once you see a confirmation that it's going back up, then you can trade it. Then it's a reversal. It's not just a sell-off. So, because this is what happens. If we would have just got in there and then it's down, 4.5%, blah, 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 we start to compromise, and then it's down 17%. And that's a cycle we can break. So let's just avoid that altogether and just wait for the price to be on the way back up. And on a morning like this, when you have, price action like this on that weird, sketchy volume pre-market, it's not the time to be super aggressive if you're trying to scalp. And if you're trying to scalp, you might want to keep that stuff nice and tight. So let me kick it up to the 2-minute here. So again, I'm just kind of shopping around here. I don't really have any good biases or expectations for any of these stocks. That just gets you hurt. So I'm just kind of shopping around, seeing what's active right now. So again, I don't see any of these really, except for VSIG, that are the ones that I can trade, that really has a good volume market cap ratio. So CMBM is catching up in terms of volume, but it's still in this box. So there's still low volume, which means the price isn't going to want to move from this box until the volume comes in and causes it to repel. DK, you are more than welcome to play SPY puts. I can't on this account. It's a $32 account. So I can I can watch with you, but we can't. I can't trade them on this size account. So let's take a look. Okay, so CVU, again, I'm just waiting for a pullback. I don't want to chase it up here. If I just wanted my quick 1%, I could, I could see this very easily getting to 450, which means I need a 4-cent move. So if I got in here, it would have to, there we go. So we would have already hit that. So, and that's, I also want to just really point out how easy it would be, or how consistently we can get those little 1% moves. And your net P&L, by the way, your net percentage return is going to be an average of all your profits for the day. So if you have settled cash, your P&L percentage will be the sum of all your profits weighted by dollars, and then minus the settled cash. So your percentage will be lower if you don't use all your settled cash than any one individual trade. So let's see here. So again, my goal is just to get a small percentage for each day, because I know how stupidly it compounds. And it's really just about waiting for the good opportunities. So far on CMBM, I'm seeing remember this is a transitory zone that we don't really trust, but we use it as a sign of strength to gauge a move through the yellow box. So it looks like it has potential. It's showing some strength. I don't know, that's so hard to say. I just got to wait for it to actually push through this box now. And I've got my orders set up here, so I can place my control 9 will be my buy 2 with my +1 take profit, 1% take profit. There's a 585 wall, 590 wall. Let's see if that 590 gets taken, or if it's just going to putter around a little bit. So I might take one towards the upper half of this box. If it breaks over like 580, 590, I'm going to go ahead and get in right here. If I can get filled. If I can't, that's okay. All right, so I'm filled, and I'm just looking for 1%. So just a little, literally I moved from 589 up to 596. So just a little 14-cent profit. So it's not going to be a huge profit on this account. And this is on CMBM. And then I still have plenty of cash to add to this if I want to. And that's the beauty of this, is that I don't have to just put everything in one spot and hope it works. So we'll let that cook for a little bit. And we'll take a look. I'm just kind of keeping an eye on the percentages down here as well, just kind of seeing what's moving. Looks like a lot of stuff's just selling off today. I didn't watch with the, oh, there we go. So we hit our take profit on CMBM. And then I can wait for a break out of this box and just do the same thing again. So 595 would be my level to break. I didn't watch with SPY, and you nailed the SPY puts. Congrats, man. You nailed the SPY puts. That's awesome. How much risk did you take? You got $82 profit. You got 1,100 investing, 611 in settled cash. Did you put, was that all from one trade? Did you put less than just under half of your account in there? Okay, it's pretty risky, buddy. Congrats, but that's risky, right? I can't tell you what to do with your money, but how many, like, do you have a net green trajectory overall? Is that working out for you? Because if so, it's awesome. I just want to make sure you're being safe. All right, we're coming up to 595 on CMBM. And for this one, I'm actually going to drop this down to 1, and then I'm going to do a control 8, control 9. As soon as 595 breaks, actually right here. So I try to do, yeah, so I have, where did I didn't do my control 9. Oopies. That's okay. So I'm going to place another control 1 here. 1%, sorry. Control 9 is my 1% take profit. And then I've got a 6% take profit on the second part of the share. So this is, let me pull up your trajectory here. So this is your, well, I got to turn my camera off. Sorry. My camera is probably blocking that. All right. So this is your P&L trajectory here, right? You had a lot of ups and downs here, buddy. I like it, but it's, you got to be careful with this stuff. Now, what would you say, or how would you feel if we were able to take the bigger chunks of this, right? Let me just screenshot this and then I'll edit it over here. How would you feel if we were able to take this guy, and these guys are good. These guys are good. How would you feel if we were able to take these two guys and bring them back up to make them about the same size as this guy? Is that something you'd like to do? Like this number would get higher, right? If we were able to do that. So that's what I want for you. I want you to take those losses and make them smaller. MSAI, what's that one doing? Oh yeah, look at that. Top, you're an animal. So wasn't watching this one, and that's okay. But yeah, it looks like it slammed up to the upside. That's beautiful, man. Good stuff. So that's when I traded yesterday. Again, I just got my quick 1%. And then today, like with CMBM, I'm taking 2 shares on the small account, obviously, you know, and assume it was on MSAI. One would be sold here, one would be sold up here somewhere. And then, of course, if we wanted to have any other runners, then we just move our stop losses up and let them breathe. And that's clearly pushing for a high. That's awesome. Let's bring that back down to the 2-minute. So in this situation, you've got a 5-candle run, right? So from here all the way up to here, every single candle in this sequence has a higher low. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles so far with higher lows. So every single higher low from candle to candle, like we start here, right? 1, 2, 3, oops, 4, 5, 6, 7. Oh, I keep letting go of my mouse button. 8, 9, and 10. This one's closed, so we got to wait for this one to close before we move it up. But that could be a partial stop loss. And then that way, if the price wants to break that pattern and go lower, then we just lock a piece of that profit right there to capture the impulse. So as soon as this candle here closes in about 10 seconds, then this threshold moves up again. Okay. And when you get bigger position sizes, then you can scale out more effectively. I'm just going to move that up now. And that's how you can let the process kind of scale a little bit better. So beautiful trade, man. That's good stuff. And then you're letting the chart kind of tell you when it's time to get out and not trying to guess where the top is. Because you could have sold here if you wanted. So good stuff, man. Always selling the upside. Yeah, I like to sell into strength. I mean, and this may continue going, right? This may just touch this low here and not break below it, and that might keep you in the trend, in the impulse, right? It's only when that breaks that the impulse actually starts, to the downside anyway, the potential impulse, I should say. So there we go. So that would have been a lock profit right there. And then since you're now looking at lower lows, you can look for isolated higher validated lows. And then you can move your full stop up from down here, wherever it was, and capture the overall swing rather than just an impulse. Because remember, an impulse is part of a swing. So you've got, this is the impulse, a pullback, another impulse, another pullback, impulse, and then you've got like a reversal, right? And it's just the same thing, but backwards. All right. So capturing these impulses, we can do with small pieces. And then once we see these swings, then we can, once the lows form, we can move that up, and that's our full stop. So then we sit out of this reversal and we don't lose that. We don't give all that profit back. Sorry, let me just erase all these. So that's good stuff, man. Let me just peek back over here at CMBM. We're just back in the box, and that's cool. It's not quite low enough for me to add it anymore, so I'm just going to hang out and wait and see what it does in this box. And let me take a look here. CVU also pushed right out of the box. Beautiful, beautiful. But again, it's kind of a sketchy chart, right? For this one, I really want to see a pullback into this box and then a push out of the box. I don't want to see kind of a half hover where it just kind of hangs out. Those are cool and all. It's a sign of strength, but I just don't like it because it makes it difficult to get the actual specific entry with a super small, super fine-tuned risk that I like. So I'd much rather just get a cleaner pullback on that. But I like it. It's got a lot of strength to it. And then of course, VSIG is just moving down, right? Remember, this is the one that I had on the watch list that just never moved up, therefore no trade, right? And I use this as an example of stuff not to just blindly jump into just because it happens to be going down, because that's the stuff that hurts us. So let me just peek back over here at CMBM. And again, it looks like they just like hanging it. It likes to hang out in this box. And that's okay. It's the way it is. And there's another box down here. If we come down here, this is the area where I'd like to add. I don't want to add up here because all my money's so far has already been kind of contributed up here. So it's going to go up or down from here. If it goes up, I just take my profits and move on. If it goes down, I have an opportunity to add some more on the way back up for a better move with a lower average. So it's just about having a plan for all the directions. I don't really see much else moving here. Again, days like this, the volume is just kind of garbage. There's not a whole lot we can really do. And that's okay. If you're not going to catch the one that gets the volume when it's got the volume, you're just kind of waiting, right? So Thursday mornings, it's kind of hit or miss. Mondays, Thursdays, and Fridays, right? So JZXN, that's the other one that I had on my list up here. It's hanging out in a range. There's nothing we can do about that. Unless we want to trade inside the range for little pieces, but I can't trade it on this account. And there's not really much point in doing that. So we're just hanging out. So I've made 2 commitments so far. The first one, I've already locked in a small profit, 13 cents. Remember, this is a $31 account or $32 account. My goal is just to get 30 cents a day on this because that's how it compounds. So there's my 1% take profit already hit. Now I have a 6% up here on the other half of the position, just 2 shares, remember. And don't let the small share numbers mess you up or think that this is any less like potent, because this is literally how I got to be where I'm at. Like strategies like this mixed with a much bigger passive income engine that compounds in the background. That's how we make these good profits. It's not going to be on chasing, 30 30%, 40%, 90% profits on low float trash. You're going to have those. It's going to be in the mix. But if you're giving up all your profits elsewhere, it's not going to help you. So if you're just giving up all your money trying to chase those, and you're figuring, like, you're struggling to figure out why you're not making progress, there's nothing wrong with just bringing it down and just catching those super consistent, super achievable profits. So now we just kind of wait and see if this can break over 6 and get up to 630. Showing a lot of strength out of this box. Remember this box that we drew pre-market based on this guy over here is on the higher time frame. I think this is the 5-minute time frame I drew this. You know, this guy here just absolutely pushed the price up. That's the potential of the move that we can expect potentially if it comes out of that same zone again. That's why I like to draw those boxes. So there we go. We're getting a little strength out of this yellow box, which we kind of knew was a stronger zone. So we'll see if it goes up and hits my target. There we go. So I'm out. I'm filled. I can move on with my day. I have made twice what I was seeking so far, and I think I still have settled cash. Remember, my goal was just to get 1%. Did I have to take any huge risks to get there? No. I still have $8.62 in settled cash that I can trade with today. So we'll do one more. But does that make sense, though, that concept? Hopefully. Like, you could just take a nice, easier path here and just get these nice, consistent, silly profits. Or you can just stress out and trade all the crazy, volatile options and have some drastic ups and downs and stuff if you want. But my max drawdown, right? I had some drawdown on 1 share, maybe 2 shares. I think I was holding 2. So yeah, I guess it would be more fair to say I had drawdown on 2 shares. But how much down was I really? I don't think I was. Or if I was, it wasn't much because I already locked in profits on the 1 share earlier, right? So let me just move this here. And all right, so yeah, I'll place one more when I deem it's appropriate. It's over 660. I'm going to go ahead and grab some right here. So I got 1 share here, and I'm just looking to get filled at 622. So it's literally a 7-cent move. Oh crap! I forgot. Let's zoom in and make it super dramatic. I'm gonna make it super dramatic. There, we'll do it that way. Oh no, you're going the wrong way, buddy. That's because I zoomed in. That's how it goes. Come on. It just likes these boxes, guys. Annoying. I'm just kidding. That's fine. So again, you know, it's going to like these boxes. You can see the volume's kind of ebbing out. When the volume comes back in, that's when it chooses which box it displaces from. So it seems to like this box now, and that's okay. This is the box that kind of nourishes it. This is the one that feeds it. This is the one that accelerates it back to the upside. So as long as it holds this box, I think I'm fine. And I've just now given some of the profits back for the day, and I'm back around break even. So it might look like a horrible sell-off and all that good stuff when I'm zoomed in super far. But realistically, it's just giving some profits back. So A, I didn't have to take this drawdown. B, it's okay, right? It's not the end of the world. And C, it's probably going to snap back up and we'll be fine. But we'll see which way it actually goes. I don't know why I can't talk today. My denture is like being weird on me. HBIO. Oh, that's a nice impulse. Look at that. Good stuff. Oh, I didn't draw any boxes on this one. Whoopies. That's on me. Let's find a good time frame here on this one. So 3-minute looks like trash. 5-minute looks like looks a little better. I'd say probably the 5-minute. That's I think that's about as far as I'd be willing to go. So on the 5-minute, you've got kind of a zone here, right? Because it pushes the price to the downside. And when I say that, I'm looking specifically at this candle right here, just like I do this one here. But this candle is a smaller range, and it provides a larger candle than its peers. So if we look at like all these candles here, this guy's larger. And I look at the candle that forms that. So let's see what else we got. We got one right here. Let me make that one yellow because that provided a much better move and a sustained move. And then I don't see anything up here. Now this one up here exists and it does provide a larger candle sell-off, but it's such a wide range. There's not really much point in drawing a strong level there. So let me just make that like a darker blue, just so we have it. And that's kind of your range. So yeah, right up here is basically where I'd be looking to get out of that one personally. So good trade top if you're in that one. Back to foul. Then, you know, you can come down and look at the 2 minute and all that good stuff. And this, I couldn't trade this one on this account. Yeah, that's pretty nice. I like it. And I also want to point out here, you know, if you didn't know the strategy that I used to draw those, you know, it's going to look like confirmation bias because it's going to, oh, Pookie just drew some boxes where the price took off from. And that's not necessarily true because if you look at these candles here, it provides exactly what I've been pointing out on my streams for weeks, right? This is the box strategy. You've got abnormal size candles and you've got candles that form them. So you have a fair value gap right here, right? And you look at the candle that forms it. You got a fair value gap right here and you look at the candle that forms it. And then you just look for moves out of that box and into the other one. And if you look, I'm willing to bet if we go back in time, there's probably another instance of that same kind of move happening between those ranges. So let's kick it up to maybe the 30 minute here. There's another attempt right there, another attempt right there, a good move through right there. That's awesome. So it's a kind of a highway there, it looks like. And we're going to be above that. If I go too far back, it's just a garbage stack. So the zone, you know, the range itself there, the distance between those two ranges has pretty good established validity there. You know, and we had this bigger sell-off out of that box. So, you know, we can look for a move out of the box to the downside if we want. If it wants to punch through the box like it did previously, back in however many weeks ago that was, that's there too. But what we can recognize is that, you know, in a trade like this, we can look for a break out of this box and sell into this box if it pulls back, right? If it wants to keep going, that's great. But when it's coming back down here, that's not, you know, that's not keep going, right? It might pull back up and keep going from there, and that's okay. But right now, all we see is it's pulling back. Okay? So I don't want anyone to hurt themselves on stuff like that. If you get this kind of move, 21% move, there's no reason not to just lock that in my opinion. At least something. Lock something in and you'll have a better time. And that's all. Top's looking for an INTS high risk quick scalp over 88 cents. Let's take a look at that. He's looking for a break of the high. I like it. Let's peek at that. Let's also just see if I can grab some historical levels here. I don't think we have anything over here. That's a nice, beautiful, beautiful run there. Now I do have a level drawn here at $1, and that's just for the breakover. I could very easily see that breaking over $1 today with that kind of strength, but it's got to get that volume. And this volume is just kind of, it's like that excite bike track where it's just kind of up and down, up and down. Ideally, we just see a big mound of volume. That's what we usually want to see on those bigger moves. So yeah, if it gets breakover, that could be enough to push it and keep it over there, get that volume to surge in and stay. But right now it's just kind of ebbing and flowing a little bit. That's not really what we like to see for those. So yeah, it's best just to wait for a breakover. So we'll keep an eye on it here. You got some pretty sizable walls here. 85 cents is a wall. And those who have been on my streams know that when we get those chain fills above the walls, we get nice pops, but not before, right? So CMBM, for example, I got in a little early. It didn't break yet. I got in as the walls were starting to fill, and that's on me. But I still like the strength. I still like the setup, so I'm okay with it. So CMBM here, or INTS has an 85 wall, 118, 117.8K, 118K. So we'll just keep an eye on this one and watch this wall get chewed down. That might be the approach right there. I see a lot of orders coming through on the time and sales, but not the order book. So 121, 107.80. There we go. So that's going to probably break here in a second. It's either going to break or it's going to get slammed down, right? But they were starting to fill pretty good chunks of that wall, which is always good to see if we're looking for a breakout. Because we want the chain fills to push it over this 88 cent level, 88. So until it conquers that wall, it's going to have a hard time. You're probably just going to see wicks and pullbacks and stuff. But every time it approaches that, it's like a battering ram. So we also want to keep an eye on that because that's what helps get us through those levels. So this took down, it was at 118K, now it's 63K. So they added to it maybe 5 or 10K, and then it continued to chew down until it got down to like 63K. So there's definitely a lot of pressure there on the 85 wall. Sorry about my chair, by the way, it's super loud. And that's why we wait for the breakout, right? So we've got the battering ram here. This is the outer portcullis. This is the keep door. We got to wait till that actually gets smashed before we before we see the invasion there. Oh, also just got to peek back over here. We're getting a little bit of a move here on CMBM. Let's see if I get filled. Remember, it's got to get to 622 for that one. So a 7-cent move from my break even, and it popped right out of that orange box again, and the yellow box just accelerated it through, just like we like to see. So these ranges have validity. It's just a matter of what happens above them from this one up to this one. And I don't need to be part of that whole move because remember, I just want to catch a small piece of it. So we'll see if it continues moving, if there's enough pressure, and then also keep an eye here on INTS down here on the bottom here while we watch that. There's a 620 wall here. Looks like that's got potential to chain fill. So this is a scenario where I, as an experienced trader, would probably just pull the seller and move it up, but I'm comfortable enough just leaving it where it's at 622. It's just got to get on the other side of that 620 wall. So we'll hang out. There we go. So I'm filled. All right, so I set out to get 1% for the day. I ended up with 1.99%, and I still have a little bit of cash left over, but I don't need to trade with it just to spend it. So let's kick back over to INTS, and we're just kind of hanging out. Remember, it's going to act like a battering ram every time it comes up to this wall. And what I think we'll do, I think you guys will, maybe this will help you visualize it a little better. I'll do one of these, and then I'll set up. Well, I got to do a tick charts. We'll do one of those, and then we'll move the 85 cent. That's way too skewed. This is a baseline chart, so I just want to put 85 cents right at the middle. So let me just draw that line. All right, so this is basically what we're looking for. Let me just move that over there so we can see it a little more clearly. So we're looking for the price to slam up into this 85 cent level. Just gotta move that so it's a better fit. So let's watch when INTS comes up to this 85 cent level. Let's see if it slams up against it, gets rejected. What we'd like to see, let me just draw this out because you guys will probably like this a little bit better if I show you. Let's say this is our level, and then what I like to see is a little bit of this, and then a push, and then a flat plateau, and then a pivot like that, and then that's usually when you get your breakouts. Okay, so let's see if we get that. All right, so there's the slam. You guys see how it's kind of slamming up into that level there? There's a little bit of plateau right here. Yep, let me see if I can zoom in on that before it goes away. You guys see that? Or it just kind of hangs out? You got some over here as well. Let's see if we get a nice flat one, though. A nice flat stall. These are kind of small. I don't really like these. I really just want to see the price kind of chop a little bit and then push up into here and then chop and then stay at the top. I want to see the heartbeat, and then I want it to stall right at the top, right at that wall. Because when that happens, then we can see the time and sales start to flood with non-mid fills. So I want to see a bunch of ask fills come through. And then that's when we see the price go flat, and then we see it pop. And that's what I like to look for. So let's see if we can get another live example of this, or if it's just going to be wonky and sell off again. Let me just move that a little bit so it's just kind of more on the level. You guys see how like violently it's being pushed away every time it fails? It's because nobody wants to stand there and get shot with arrows, right? They're going to retreat. All right, so we're getting a little bit of slowdown here. You guys see how that kind of screeched to a halt there a little bit? The time and sale slowed down. Here's some pickup. Let's see if basically there's an 81 wall. There we go. Look at that. Beautiful. So we got a slight pop over. We got an outside fill. It's at 85.5. Let's see if that's enough to... Okay, so here's some chop. Remember, this is what I like to see. Chop, push up, plateau. So we got the plateau. Here's some more chop, and then we should see a high stall and then a break if it wants to go up. Nope. All right, so they tried, right? You guys saw that was a textbook attempt, and they just failed to break over the level. So let's see if they can do that again. Does that make sense? Top, you just nailed a 10% on VIVK. That's beautiful, man. Good stuff. All right, getting a lot of magnitude down here. Remember, this is specifically what I'm looking for. I'm looking for a little bit of a channel, a little bit of chop, then a displacement, a move to the upside in price. So I want to see some aggressive ask fills come in. And then I want to see a plateau like we saw. And then I want to see a little bit more chop at the level, slamming up into the level. And then I want to see a breakthrough. Does that concept make sense to everybody on this time chart, or this chart type, I should say? Charlie says, yes. Good stuff. All right. Does everybody here know what a baseline chart is and the tick chart? Does this make sense? Or is this just something you guys haven't seen before? If you really want to nail your entries, this is how you do it. Like, you have to study volume and you have to study price movement, not just candles and not just trends. So if you don't know what confirmation looks like, it's this. Like, this is the nuts and bolts of how the market moves. So here's chop. Okay, so right here, for example, would be like a doji candle. If it closed within it would be a very tight doji candle because the price didn't close within the minute. But this is a level worth watching. Is it possible to get that red indicator on TradingView? What's it called? So this is a baseline chart. And the way that a baseline chart works is that it cuts the screen in half. Okay, there's a top half and a bottom half. And then basically if price is below that line, that midline, like you see how this line right here in the middle doesn't move, regardless of where I drag it. If the price is below it, it's just going to be red. And if the price is above it, it's going to be bullish. In this case, it's white because I have a color accessibility setting. I changed my color scheme for people that are colorblind. But if it was on your chart, it'd be green, for example, by default. So I just put mine back here at the price that I'm watching for a level, for a breakout. And then that's all it is. And then for the time frame, I went down to the 1 tick. So on TradingView, you should still have, let me just pull this up actually. I keep forgetting I have TradingView on here. Let's find out together. So you would basically go here, and then you would do baseline. And then you would go to time frame and go to 1 tick. If it lets you. This one does not for some reason. What chart am I looking at? INTS. And then you just go to the 1 tick here as well. What? I already have premium, buddy. Okay, maybe that's worth a call to customer service there. I definitely have. I'll do it to 1 second here. That's weird. Yeah, I mean, I have to have the highest one because I post stocks, buddy. So if I draw my line here, and then I kind of skew everything in, right? And then I move the price in like this. then I've got my baseline chart on TradingView. Okay. Does that make sense? So yeah, that's how you just accomplish the same thing on there. Yeah, anytime, man. Thanks for asking that. That's the kind of stuff that helps everybody. And again, just because the price breaks over a level like that doesn't mean that that doesn't mean it's an entry, right? It just means that we can study how that volume formed by getting a good look inside of what kind of moves caused it, and then we can judge the strength of it. So if we see something like this, for example, this is perfect in a textbook sense, like because of what each phase represents into a breakout. Now, if we see something different and the price just happens to break over the level and does something different, that might still be perfectly valid. It just means that it formed differently, so we need to assess that as well. But this is exactly what I like to look for. So it looks like price just isn't ready to break over the 85-cent level just yet on this chart, which is okay. That means we just sit on our hands and we don't look at it. We don't stress out. We don't panic. We don't want to get in early because it's a discount. We just wait for that 85-cent level to break so that we can assess the breakout for the 88-cent breakout. Okay. So for right now, I have one box where the price just wants to hang out. This is the reversion box. The price is just going to come back to it from both directions. It's just going to hang out. And I drew that box based on what I saw over here, right here, going into the, plus before when we went into the other lead up here. And the really cool thing that I like about this tick chart is that we can, with the baseline specifically, is that we can really just hone in on it. Like we can look at it and keep this part of the, like this segment up. Because what a tick chart does is it removes time from the equation. Every move on a tick chart, every plot is a price fill. So it's going to keep moving if the volume is moving fast, obviously. We're coming back over here. I got to get ready for this. But we can lock that in time and we can look at that move and be like, oh, okay, now I see exactly how it formed. I'm surprised I did all that without moving this up and down. Normally I drag it all over the place and then I have to line it back up. So we'll just kind of keep an eye on it. And you can do this with any other stock. Like CMBM, for example, is now breaking back up over 630, right? 630 was our level on that. So let's draw a level. Well, 622, I think, was my specific entry. But you can do that and then just scale the price. Scale the price down to it and put that line, whatever level you're watching, back on the midline there. And then you can assess the volume at that level. So if you see a level here on the order book, like let's say 626, for example, 626. Okay, we see there's a wall here at 626. So if you're looking to study the order book and the volume, this is how you can do it. Because if you see a bunch of orders come through in the time and sales, but you don't see this wall move at 626 or vice versa, you know that that's one of two approaches that the algos are taking to that price level. And if you don't see this, then you can always just pass on it, basically. But if you do see that and the wall gets smaller and you see a bunch of 626 fills come through at the same time with speed, magnitude, and the colors that you prefer, meaning that you should see a wave of red first, then a wave of green, not white, then that is a good, strong, confident entry. And that's just because of how the market works. It's not, I don't want to go too far down the rabbit hole because you guys hear me lecture about this all the time. But when the price moves, it's not because some different number of buyers comes in than sellers. It's the same number of buyers and sellers. But one side is more aggressive. They place an aggressive order, an active order on the ask, and it reaches across and pulls the bid price, and it matches an equal of the same in opposite direction. And it pulls the mid price up by doing that repeatedly, because eventually the ask orders disappear because there's none left. Then the exchange has to go up to the next price, and it starts to pull up those more aggressive fills, and that drags the bid up with it, basically. So it's kind of an oversimplification, but that's how price volume actually moves. So if you take it with that understanding, and then you look at the order book and the time and sales and the volume, especially on the tick price with a baseline chart, it all kind of comes together a little bit easier. But I'm throwing a lot of stuff at you guys, so it's going to be a little complicated, sorry. Oh, crap. crap. I am sorry about that, JWag. I just saw your message here. Yeah, let me get you the, I mean, I'm all over social media today because it's a free stream, but let me, okay, Nikki say one. All right. Yeah, so anyone that's having issues watching the screen, that's the link to the YouTube channel. And this is kind of what I was worried about when we switch back to a voice channel. The stages feature that Discord has was giving us a lot of trouble. A lot of times people just couldn't hear what the streamer was saying, unfortunately, and that sucked. So we had to go back to the traditional voice channels, and there's a limit to how many people can actually watch the stream. So if anyone does have trouble with that, we'll try to put the YouTube link in there for you. Even if it's like a premium stream, we'll just put it in the premium channel. It'll just be unlisted, but you can still see the video there, and there shouldn't be a delay on that. It's full in Discord too. Yeah, and there's not a whole lot of people. Like, I think the limit was supposed to be like 99 people or something. We don't have that many in the Discord channel. I think Discord just hates us. I think they want us to just build a better platform and get off of Discord, which is what I want. Let's do it. All right, so we're coming up to the 620-ish range eventually if we get another little push up here. So we got a 625 wall now. So let's move that down. 625, I said. And we'll just kind of watch and see. Remember, I'm just looking for this pattern at 625. So this green line right here, this horizontal line, is 625. Okay. So I'm looking for a chop. I mean, kind of similar to this, but I'd like to be a lot more structured. Like this range right here seems nice. I kind of like this would qualify for this part for me. Now I'm looking for a push up. So a push up to like right here, right up into this level. Remember that push up should have a plateau. So it should do like one of these numbers, like a square root sign. And I don't see it yet, which means no entry. 25, that's crazy. It used to be at least 50. That's why we went to stages in the first place, because like we'd have streams of like 85 people in there. And stages was the only way that we could accommodate them all. I hate Discord, man. I'm sorry, guys. If the Discord CEO's in here, okay, I'm going to have some choice words with you, buddy. You're going to get a finger wagging. Yeah, Discord is absolutely Netflixing. Porter, I see JWag's comments on YouTube. He's chatting with me on there. Oh, JWag sent me a DM. Sorry, I'm seeing the Docta on YouTube. All right, so in this case, we did break over our 625 level, but we didn't get our plateau. Right, we didn't get this pattern that I like to see. And remember, this is textbook, so we might not always see this, and that's okay. But if you really want to be a hardcore fundamentalist about it, actually, yeah, I think we kind of got it right here. Let me see if I can screenshot that really quick before it disappears. Oh, this is going to be a challenge because the price is rocking and rolling now. I don't know if I'm going to be able to. No, we'll find a better example. You guys get the idea, right? We're just looking for the price to break out and, this level here produce, break that level, produced all that stuff. So I like it. I think it's pretty good. Now we did, so something here is different, and I want to point out specifically what's different about this instance. Hang on, guys. Sorry, I'm just gonna have to screenshot. Whoa, yeah, I got it. All right. So now, if we're looking at this, let me just get over to the current price action as well. I'll just switch back to candles at this point, and then we'll go back to 2 minute. All right. So. Again, right out of that box too, which is pretty cool. But what we're seeing here, remember this, I'll draw the pattern up here. All right, we got this, and then we got a displacement, and then, oops, we got one of these, and then we got a displacement and a plateau, and then one of these, and then a break, right? That's what I like to see right there. So in this case, we got the chop, and then we got kind of a broken plateau here. So we didn't really get the setup that we liked. It just, the price is just a little too strong. And then we got this kind of weird anomaly right here, which we don't typically see on a move like this. So I mean, you could make the argument that, this would be the chop and that would be the displacement, and there's a little plateau there, and then it doesn't fit, right? So the pattern doesn't fit. We can't lie to ourselves. We can't live in denial. It got part of the pattern in that we got this here, and then we got this interrupted plateau, which this ugly, right? So that right there would have been a deal breaker if I was just an absolute psycho about my entries. And that's okay, right? We still got a good move, but it wasn't the high quality move that we could have seen if we really wanted to see a big move right there off that level. So, we got pieces of it. That's good enough. Obviously, the price is moving up above where we wanted, and that's okay. But, we can't always get perfection. So there's only two things we can do in that case, right? Because the market is very Boolean. Our participation is very Boolean. We can choose whether or not we're in or out at any time, right? We choose between one of two options every single time we make a decision in the market and in life, if you really think about it. It's always this or that, right? So in the market, if you see what you like and all the patterns match and all the stuff fits your criteria and it checks all your boxes and stuff, you have a choice whether or not you get in or whether or not you get out, whether or not you stay in, whether or not you stay out, whether or not you wait or take action, right? So in this case, if I'm just looking for a quick 1% and I just look at this chart and say, okay, well, how many candles have gone 1%? I would see a lot of those, okay? And if I really wanted to scale up those profits some more, I could just look for levels like these ranges here, right? And say, okay, well, I just want to trade from here to here, but how do I do it relatively safely? And how do I secure a profit just in case it doesn't make it all the way up there? And that's when I can just buy more than one share and I can scale out along the way, just like we did. Does that make sense? So I know I'm a little bit all over the place today, but I'm trying to show you guys you can have your cake and eat it too. It doesn't have to be an or statement all the time in the market once you have a clean system. So if I just want to put consistent contributions into an account and I want nice achievable profits that I can get consistently almost every day, I can't guarantee that you're going to get it every single day or that there's some sort of expected result because participation and performance may vary. But I can tell you, objectively speaking, that it is a lot easier and more consistent to hit like a 1% target than it is to hit a 17% target, right? So if I have $1,000 and I want to trade with that $1,000, I can take all 1,000 of it and put it into one stock at one time, and the price will go up or down, okay? If I want to lock $750 of that in at a nice small profit, like 1 to 3%, and just lock it in, I still have $250 for the rest of that move. Okay. And I'm effectively taking that 750 and I'm just paying myself interest on trading the 250. Okay. So it's a really good concept. And once you get your brain wrapped around it, it becomes a lot more digestible once you realize how stupidly quick those percentages can compound. And that's why I pulled up that spreadsheet earlier to show, if you don't make any contributions, let me see if I can just pull it up again really quick. No, I'll keep that part of it kind of small because I know you guys want to look at stocks, but I do also have to get off here pretty soon. If you make $100 contribution for, these are just months. Okay. So 25 months, $100 a month contribution starting at like $30, you end up with about 85K. Also, let me pull this back up over here. All right. Does anybody here not think they can get 1% per day? If you think you can make 1% per day, if you really tried, put a 1 in the chat. If you think you can't or that it's not practical, put a 2 in the chat. Dango says 1. Okay. Cruz says 1. And G says 1. We just made 8 out of CMBM. Good stuff, man. Did you lock it as it was pulling back down? Like as it started to pull back down? Kenny Pay says 1. Porter says 1.25. Okay. Is that you locking some and then letting some run? Elton says 1. JWAG says 1. I could definitely get 1% per day, but I want more and end up making less. And that's kind of the trap we fall into. And it's perfectly understandable. Our brain wants to make more. And I will tell you a little secret, a little disgusting secret about the human condition is that it will never be enough. You will always want more. There's a very specific reason. in terms of neuropsych, why our brain always wants more and more and more. We're constantly going to push the goalpost back. We're constantly going to seek more. We're always going to want to push, right? It's an evolutionary drive. We're supposed to do that. It's perfectly healthy, but the market wants to exploit that, and we let that contribute to our destruction if we don't control it. So that's why I'm saying that rather than just locking in 1%, like you guys saw, I took 1% trades on almost every trade I took except for one. Okay, the one trade that I got more from was one that I took 2 shares of. I locked one at 1% and one at 6%. Not a huge difference there, but I'm up twice my daily goal just from that one extra trade. And I only took that after I locked in enough profit on the other one to make sure that I wouldn't go like super far into the negative if I had drawdown. And I did have drawdown. And you guys saw it didn't go down much. It just went down to around my break even. But we feel like we have to be in the market all the time and we have to work hard for it. And it seems a little too easy and a little deceptive if we don't work hard for it, right? Because we're conditioned outside the market that more work is more pay. So we try to just make stuff happen in the market. And if you're struggling doing that, I'm just going to ask you to think, is this a side hustle or is it a lifestyle? If it's a side hustle and I can work for 4 minutes a day and make, 1% a day that compounds to like $84,000 from $30 and, 2 dozen $100 contributions, that's almost tripling those contributions. Or it is more than tripling, I guess. It's quadrupling them, I guess, almost. I'm going to take that 1% and I'm going to run. I'm going to giggle and I'm going to live my life outside the market. I don't want anyone here to feel like they have to master technical analysis. You always can. I'm not discouraging anyone from spending time near the market, but I don't want you to have to stress out about it or feel like that's the only way to make it work, especially if you've got passive income, just growing and compounding. So anyone here that's not net positive for the last 3 months from just their speculation, I encourage you to just paper trade this. Just practice it for a month. Practice it for a week. See what the result is at the end of the week. Exactly, Porter. Just taking my profits and running. Everyone else is stressed out all day. I put the market back in the box. I set the box next to my desk and I move on about my day. Because time is a more valuable currency for me than stress. And I don't like stressing about the market over things I can't control. I'll spend some time waiting. And like you guys saw me wait this morning. I didn't really see too many good opportunities, so I waited for them. But there's no reason to stress out about it. Did I leave some profit on the table? Absolutely. Do I care? No. That doesn't mean anything to me. My goal was just to get in and out. I'm not going to sit here and hope and pray that it goes up to the other box I drew just because I drew a box. Now I can always move my stop losses up and we'll build into that. But for right now, I just want to show you guys the absolute foundation. Just financial stability outside the market, building good credit so you don't pay more to maintain debt and you don't need unhealthy debt, right? Pay to maintain healthy debt or get paid doing it once you figure out how to do that, right? Reducing your recurring expenses, just making sure you have extra cash flow, okay? Everyone can do that. That's not difficult. It just takes a little time and a couple of phone calls. And maybe a spreadsheet. Nobody needs to starve or live on ramen just to make it in the market. I hate seeing that crap on YouTube. I see it all the time. And it's like, oh, here's how I went up to $3 million and blah, blah. And they completely leave out the fact where they work like a 6-figure job and they're just making this content and then monetizing it even more so that they could just compile these videos and then convince a bunch of people that they need to be poor to be rich. And that's not how it works. There's just unnecessary money that you're paying to companies and to the government that you don't have to, but you got to figure out what those are, and I can help you with that. But a lot of it's just not knowing different. And then once you're stable outside the market and can make consistent contributions, and you put the majority of that into passive income, and you put little pieces like this into speculative income and just make consistent contributions, and then you just let stuff compound without throwing it all back in the options and stuff, the numbers get really big really quickly, I promise. But we have to break that cycle of wanting to be stressed. It's like an addiction. We want to control stuff. We want to take charge and make things move in the way that we want them to move. And that doesn't work for everybody. So until you know how to let things move in the direction that's going to make you money, you have to learn how to not let things move in the other direction. And you have to build the floor and then you have to build up from that floor. So we can absolutely trick out small accounts. You guys watch me take $50 up to like $2,000 or $3,000. I can't remember exactly what number it was. It was a substantial growth over a 2-week period. But not everyone can do that. And I don't want to do that every week. It's stupid. It's not even worth the money for me. Because again, I have a life to live. I don't want to just stress out about the market. And it wasn't a stressful 2 weeks. It was kind of entertaining, but it still took up more of my day than I would have liked. You know, I'd rather just be helping you guys and hanging out with you guys and all that good stuff. So just, you know, again, financial security outside the market, build your credit score up, get good rates on stuff that you have to take in, you know, loans and healthy debt to build your credit and all that good stuff. It's also tax-free. Debt is a tax-free instrument. It's not the same as assets. So there's a whole other side once you get up to a certain level where you're going to want to live with debt. Okay, healthy debt, not unhealthy debt, not a 29% APR credit card. Systems that you can use to get paid to build your credit, for example, are wonderful. You get both of the best of both worlds. Then, you know, consistent contributions, feeding into passive income, just building up that passive income so it can compound. Starting that now is the most important decision you can make for yourself, in my opinion. I can't tell you to, but if you feel like you're going to, like, there's a lie that we tell ourselves, and that is that I'm going to trade up to a certain amount and then I'll start investing. And that is the backwards approach. Because I'm willing to bet a lot of those people a year later are still telling themselves that. They could have already had a good chunk of passive income rolling by now. And it sucks to see, it sucks to say, and it sucks to hear it, but that's just how it is. It's a lie we tell ourselves because we feel like we have to have money to make money, and we're not willing to accept those smaller compounding profits because it doesn't gratify us. It's not fast enough. So we want to do the fast moving stuff in the meantime. And again, remember, our brain wants more and more and more. So let's say that you did make a bunch of money on speculation. When are you going to start investing it? You know, you're just going to constantly want more and more and more because you didn't break that cycle. And I know all this stuff because I did all this stuff. So, and I see other people do it all the time. You know, I touch base with so many of you guys here, not just the ones in the stream, but just in the community. Like I get to watch you guys do all the same stuff I did, and I'm just talking to past versions of myself. You guys have your own lives, you have your own circumstances, experiences, and all that, and I respect that. But ultimately, I get to talk to past versions of myself in the market because that's what you guys are. You're all on the same journey. You just don't recognize it. So yeah, again, I'm not going to get like super lectury or preachy about it, but passive income, financial stability, those are two very overlooked concepts in the financial world for a lot of people. And I hate seeing it because you guys are setting yourselves back. And I'm not like pointing anyone here. I'm just saying that's in general, traders tend to do that to themselves and they just don't recognize it. And then, you know, later on down the road, it's like, oh, now it's time to start investing. What do I do? You know, and then you put all your money into stuff and then you try to figure it out. And then you get bored because you didn't set that expectation, that threshold earlier on, and really optimize your ability to maximize these smaller amounts for the speculation stuff, and accept the profits really as good enough. So now you want to take more out of your passive income and put it back into speculation and just keep that cycle going, and it just gets messy. You know, so again, I want to help you guys break that cycle and get the right habits and the right structure in place early on, so that way you're not stressed out. Because I hate seeing that. Sorry, let me just. So does this make sense? And again, you know, 1% per day isn't going to happen every single day. I can't make that guarantee. There's going to be days where maybe something happens. Maybe you take a 10% loss and it sets back a whole bunch of days. And that's okay, right? Because most days, I'm going to get that 1%. Most days, it's going to compound. Over the course of a week, it's going to be more than 5%. As long as I don't take that 10% loss that week, right? So over the course of a month, it's going to be, you know, 22, 23, 25%, whatever the number is, right? Plus, if I'm making consistent contributions, it grows even faster. Now, if I take this $100 and I switch it to, let's say $500 a month, right? That number, month one is $649.31, obviously, but you know, it doubles, then it almost quadruples, and then it multiplies almost by, you know, 6.5, and then it's up to 8 times. it's a big no, and this is with contributions, obviously, so we can't be blind to that. But after 2+ years, you're looking at 400K, and that's just getting 1% per day and making some fixed contribution on a regular basis once per month. And the speculation doesn't change. You're still just getting 1 quick percent per day getting in and out. That doesn't include that 6% second target or breaking positions up and scaling out and letting additional profits happen. This is just locking in 1%. And you guys see how stupidly small 1% is. If I just draw this right here, like at the top of this candle, up to 1% is right there. Do I think I can get 1%? Let's watch. First, I need entry, right? So I just wait for the price to come back up. I can place a buy stop with a take profit bracket on it. But let's just watch. Let's see if it happens. Now I have a disadvantage here in that I'm coming off a red candle, so I can always just wait until price is bullish, right? So here's our entry, obviously. And one of two things is going to happen, right? It's going to go up or down. Now, if I don't throw all my cash in this, I then have the ability to push the shares down a little more, or I can just cut it immediately if it doesn't go up, right? I'd rather have a break even or even a 1% loss. And that's it. I just try again. And the number one factor here is just not buying stuff when it's red, So I'd rather just wait till, there's a bullish candle and things are moving the direction that's going to make me money, because then I can just get it with less resistance, less uncertainty. So let's just keep watching this level. I'm willing to bet, and I know bet is not the good word to use here, but I'm willing to entertain the idea that if we draw our 1% level here and here, we're probably going to just look back and see that hit quite a bit. So now if I zoom in super far, right, we got to make it super dramatic because we want to be stressed out all the time. I just need the price to get here. So 6-cent move. Do we think we can get that most of the time on a $5.67 stock? Sure, in my opinion. And this is a 6%, 7% drawdown candle. We can choose whether or not we endure that. That's just going to eat into the other 1% as much as we allow it to. Or it'll come back and it'll push back up and it'll just wipe itself out, and that's okay too. It's up to me as a trader to determine what's best in that scenario, but in this case, we're just buying into a downtrend, so we kind of get what we get. Right? Like, this is a downtrend. I think we can all agree on that, right? So that alone, we're just not in the right neighborhood. So now if we compare this to, let's find a good one here. V6 showing a little strength. HBIO, here we go. So this one is showing a lot of strength so far. So let's just draw our 1% from right here, for example, just for fun. Let's see if we get it. Let's do another one right here, just for fun. Okay. One of these two is likely to hit. Otherwise, we can just cut it almost immediately if we want to, right? And if you're going to be a scalper in the traditional sense, that's what you have to do. Most scalping profits are like 0.5% to 1.5%. That's the general goal, and that's a good trade. If you can get 0.5 to 1.5% profit, you're good. So in this case, we got the 3 red candles here. Overall, we get kind of bullish move. We're kind of testing support here. So in this case, it's kind of moderate risk, but I'd still hang on to it myself personally, just like I did with was it CMBM? So we'll have to see which way it goes. But again, you choose how much drawdown you endure. So if you don't want to deal with any drawdown, you don't have to. And if you're okay with drawdown, you end up taking fewer trades because you end up holding them longer. But in this case, it looks like it would have worked out. If it didn't work out and we stopped out, we can always just re-enter later and get a better outcome somewhere else. But the amount of money we have in speculation should be very small compared to how much we have in the passive income side if we want those stable profits to compound over time. So that's my spiel, and I don't want anyone to to feel disappointed or anything like that. But if you're looking for a much safer path in the market, this is it. I'm giving you guys the keys to the kingdom here. I got my flow chart that I gave you guys. Starts with financial stability and consistent contributions, and then we break the contributions up into investments and then speculation. And then the speculation has a finite array of outcomes, a matrix, if you will. The profits get reinvested. The losses go towards tax deductions up to a limit, so we can avoid indefinite carry forward. And then the investment side, we reinvest the dividends because they're taxed at a different rate as well. And then we offset those positions with lower crap stocks that pay higher, like the yield max ETFs, so that we still get the cash reinvestment, but we also have share losses to offset the tax burden of the capital gains that we realize on the dividend stocks as we hold them longer than a year. And that helps us build that process up much more efficiently. So let me catch up on the chat here, sorry. And then I got to jump off of here. Top says, sorry, Charlie, let me just scroll. Let me scroll up a little higher here. Looks like you guys were chattering a little bit. Porter, I think you just nailed it on the head. He says, Pooks, I think I've been stressed so long that I'm actually uncomfortable with the idea of being free from it. That's the thought. Yes, absolutely. That's exactly what happens. Our brain gets conditioned to that familiar stress. People that grow up in broken homes don't like stability. It's uncomfortable. It's new. It's not trustworthy, So we tend to find reasons to sabotage. And whether we do it on purpose or not, or whether we hurt other people or not, or ourselves, that's a secondary factor to just escaping. We don't want to be in that situation because it's uncomfortable. It's unfamiliar. The market's the same way. If you have a conditioned library of references that is traumatic, you're going to seek those. It's a process and a cycle that we have to learn how to break. So I think you hit it on the head there. So good stuff. Top says just need to control it. Yeah, Top has the best mindset, I think, out of everyone here. Even probably me. I mean, he's just got it. He's figured it out. He's figured out life. So good stuff. Listen to everything Top says. Came up another with a silver spoon in my mouth. Yeah. Charlie says, I think that's how I ended up with bags. Carry some chaos for no reason. And that's a factor too, Again, it's just our brains crave stress. We like certainty, we like familiarity, we like stability, but we also like stress because it A, stimulates us, and B, it helps us develop more. It helps us process stress. Obviously, if you overdose on stress, you're going to have a bad outcome, but there's healthy stress, and that's what we call tension. So you can always have tension, but you don't want like unhealthy stress. You don't want pain. You want a little discomfort, not pain. And then Top says, there's so much strategies, Oblivion, you just have to find yours, and it comes in the losing, not in the winning, because handling the losers is more important than the winners. And if you don't give up, train your skills, journal everything, take 1 day a week to study your trades, and look for the aha thing. You will make it. It just takes time, a lot of time, and some money. You'll lose at the start. So it's not about skills, but what you are willing to train and learn. Absolutely, Top. You freaking nailed it, man. The only thing that's going to take you out of the market is losses. So it makes sense to focus on those above all else. And trading is just a journey of aha moments. It's a series of those over time. And you're absolutely right. You're going to lose money at the start. It's the cost of doing business. Your job is to get a discount. And I'm here to help you get that discount by preventing you through the Socratic method from throwing all your money in and hoping it works. Because hope does not pay your bills. It's not going to get you that outcome you're looking for. And if it does, it's not going to do it for long. So congrats if you got rewarded, but it's not a system at that point. It's just kind of a set of circumstances that you happen to be benefiting from. So let's take that, set it aside, and let's put a system in place like what I'm showing you guys, or what Lee shows you guys, or what Bull shows you guys, and Porter and Austin, and even Nikki when she has her psychology stuff. It's a mental system. You guys have to reprogram yourselves effectively, or deprogram yourselves, I guess. Every part of your brain that works against you in the market works very well outside the market. So take comfort in knowing that you're healthy and well-adjusted if you're losing money in the market by default. If you weren't, then you'd probably just be a psychopath. But yeah, you're absolutely investing in your future self, and every dollar you lose in the market has a cost, obviously, in terms of dollars and cents, but you can assign a value to that cost, and you have the ability to increase the value of whatever cost you've spent just by thinking about it more and asking questions and studying it more and more and more. You get to take that little piece of data home and study it forever, and you can pull out so much information out of so little information in the market with the right structure and some help. But yeah, I mean, you're going to have costs when you start your business. That's just how it is. You take those losses, you take the lessons that they bring, and you turn those into force multipliers for every dollar you're able to preserve beyond that. Kenny Penny got a comfy 3% today. Thank you. And I'm on my way to do something else all day. That is beautiful. Get the hell out of here. Because as much as I love having you guys here, I'd rather you just show up and get your piece and go on. I don't want anyone to hang out all day. I love you guys. And if you want to hang out and do community stuff, absolutely, I'm down. I'll play games with you guys, do whatever we got to do. I'll hang out, but I don't want you guys staring at charts all day. It's not healthy. Find a sugar mama that can invest in the medallion fund. I mean, they're out there. I think the wife would like that. I'll ask. Wish me luck. But yeah, so does this stuff make sense though? I mean, the charts are fun. They're exciting. That's how you're going to make some money. Yes. But if all you're doing is staring at charts and you're mad at Pookie when Pookie doesn't stare at charts all the time, I just need you to slow down for a second and actually pay attention to what I'm saying and why I'm not looking at charts all the time, because this is not the solution. This isn't the fix. You can make a ton of money in the charts, but you're not going to make it overnight. And eventually, like I keep telling you guys, you can get stupidly good at this stuff and you're still going to have problems because you're going to run into liquidity ceilings and stuff. And when you've got, let's say, $250,000, you're not going to be trading low float trash. And that's not the time to figure out what kind of things you should be investing in. It's now when things cost less. It's when things hurt less. Your capital loss deduction doesn't go up. Yeah. So don't hurt yourself. Learn all the stuff now. Let's learn the loss stuff now. So you can have a better time. Build your structure, build your engine. Then we find the fuel. Then we put it in the right port, and then we fire it up. And then we look for smoke and leaks and look for banging sounds. And then we troubleshoot them. We look at where it's coming from. We replace that part with something else if it can't be repaired. And then we repeat the process over and over again until your engine is running smooth and producing enough output consistently that it can run for a very long time. And it's safe. You know, it's not going to blow up in your hand as you're trying to run or drive down the road, you know. And that you're not spending your entire day working on this machine or trying to put it to work, right? Work on the machine all you want, but don't just try to dump gas all over it and hope it works when you light it up, because you're not going to have a good outcome. Tap says 3 winners here, 1 no entry and some scalps. Good day. Beautiful, man. I know you crushed it with that VIVK. Was it? That was a nice one. I don't know what this box is from, but looks like it worked. That's right. Yeah, MSAI was another good one you had. That was insane. I love it. And this one, you know, I had the box for it. I just didn't pay attention to it. I was looking at other stuff. And that's okay, right? That's all part of it. It wasn't on my list. And it didn't meet the criteria. It still doesn't for me personally. So, and that's okay. That's all part of the game. CMBM gave us nice, tight, clean opportunities. I took advantage of that. And then, you know, right now we're dealing with a sell-off, and I don't care. I don't care that it was up here, and I don't care that it's down here, because my piece of it was right here, right here, right here, and right here. Or right here, I guess. Anything beyond that, I don't care. These candles could just as easily be on any other chart. Wouldn't matter. It's a psychology thing. You just have to not care what happens after you get out of stuff. Did I look back at SPY at all? Not yet. Let's look at it now. What's it doing? Had a nice sell-off in the open, and then it reversed and bounced all the way back up, came back, retested, and pushed back up. Now it's on its way back down. So do I care? No, I don't care. It is what it is. I've got a range that I can draw. I got one right here. And I've got one right here. And it looks like this range held and produced another strong, confident push to the upside. And it looks like we're looking for a retest here. Right? Does anyone disagree that this candle is larger? Or is it the same strategy I keep telling you guys about? This candle up here as well. This is a nice one. This is an abnormally large candle compared to its peers. And this is a nice tight risk range. So I'd like this one better personally. Down here, we get a smaller candle, then we get a bigger candle right here. It pushed the price back up. And then the price just happens to go up through both those upper zones. So then it came back down. Got a little sticky in the top one, came back down and produced a good, strong, confident push out of that middle box up into here. And now we're starting to get another rejection out of this zone. So that tells me I've got a fixed number of outcomes here. We can do one of those. We can do one of these. We can do one of these. Or we can do one of those. Right? Does anybody know of any other possible outcomes here? Because I don't. Now, I'm not in this. So if I was looking for a bullish trade, I wouldn't need to think about anything until it's time to get in. And the only times I would look to get in on this one specifically would be above this box, or above this box, because that's my strategy. I don't really care what it does up above that or below here. It doesn't matter. Okay, so with that said, let me end the live stream here. Thank you guys for watching on the YouTube, and I'm going to hang out in the Discord for a little bit, but I got to do my little shutdown process. So I'll see you guys in the Discord. Also, let me put I'll put a link here in the chat on YouTube and the social media channels. That is Lee's coaching program. So if you're struggling with your speculative analysis and you want a little bit of due diligence experience and someone to help you build your trading plan, Lee does a very good job of that. His strategy is a lot simpler. It's very clean. A lot of people like it. It's on slower time frames too, so it's not as chaotic as when I stream. I'm a very technical person, so I have a much more aggressive approach to the market. But his strategy is nice and easy. It's much simpler. Plus, he's got a cool accent. So I'll put that in there. I'm going to end the stream right now, though, on social media, and I'll hang out in the Discord for a little bit, and then I got to go.